What is algorithm and how it can change the way of profit you are earning in intraday trading or option or future or currency. In any way you are trading, this can change your lifestyle. So the first thing, sort for algorithmic trading refers to the use of computer algorithm execute trading orders in financial market. It involves using pre-programmed instruction to automatically analyze the market, generate trading signal and place order without human intervention. Algo trading relies on mathematical models and statistical analysis to identify trading opportunity and make decisions based on predefined. These algorithms can be designed to execute trades based on various factors such as volume, timing, or other market indicator. They can also incorporate risk management studies and profits. By automating the trading process, algo trading aims to remove human emotion and biases from trading decisions, improve trade execution speed, and capitalize on market inefficiency. It's commonly used by institutional investors, hedge funds, and placement trading firms, although it has become more accessible to individuals in recent years. Algo trading can be implemented in various financial, including stocks, bonds, commodities, foreign exchange, and derivatives. It typically requires combination of programming skills, financial market knowledge, and technical analysis of expertise to develop effective algorithm and strategies. Now we are going to discuss algo trading offers several benefits to trader and investor. Here are some of the advantages that algo trading offers you. The first is speed and efficiency. Algo trading enables fast and accurate trade execution as orders are automatically generated and placed by the computer algorithm. This eliminates the delay associated with manual trading, such as human reaction time and order processing time. Algo trading can seize opportunity in the market swiftly, leading to improved trade execution and reduced supplies. Second, elimination of human emotion and biases. Human and biases can often cloud judgment and lead to the irrational trading decision. Algo trading removes human emotion from equation as trades are executed based on predefined rules and algorithm. This reduces the impact of greed or other emotional factor which can lead to more disciplined and consistent trading. Third, increased accuracy and reduced error. Algo trading relies on computer algorithm which can perform complex calculation and analysis with precision. This helps in identifying trade signal and executing trades based on predefined parameter. Algo trading also the risk of manual errors such as inputting incorrect order detail or executing trade and the wrong time wrong price, like that. The accuracy is clear in algo trading. Fourth, back back testing and optimization. Algo trading allows traders to back test their strategy using historical market by stimulating trades and evaluating past performance. Trades can assess the viability and effectiveness of the algorithm before deploying them into live trading. This helps in refining and optimizing trading strategies to enhance profitability. Fifth, diversification and stability is clear in this. Sixth, reduced cost. Algo trading can lead to the cost saving in several and it eliminates needs manual and reduce the dependency of human traders, thus minimizing labor cost. Algo trading also allows for efficient use of capital by optimizing trade entry or exit transaction, taking advantages of market liquidity. Seventh, assess the market approach opportunities because you will have a lot of way to assess the market opportunity. Algo trading can monitor multiple market instrument and data sources. It can identify the act of trading opportunity in real time, even in highly volatile or fast moving market. Algo trading can quickly to news price movement or other market event ensure they are not missing out that. While algo trading offers numerous benefits, it's important to note that it also carries market risk. It is crucial for traders to thoroughly test and monitor their algorithm, implemented risk management measures, and keep up with the market development and magnitude. It also involves risks. So, thank you for watching videos. Subscribe for more videos.